Hello and welcome back. In this section, we are going to talk about transaction flow. That how does a customer gets onboarded, get approved of a loan on BNPL and makes a purchase. So let us look at the transaction flow and then we will look at a few more models which is similar to the ones which we discussed in the last chapter. So first of all, let us see how does a transaction happens. So a typical BNPL transaction flow is like this. It happens, for example, let's assume that a customer has gone to an online shopping store, could be eBay, could be Amazon, could be any other e-commerce company in your own country. So what they do is that they go to the online store. They say, okay, I want to purchase something of say $100, but I don't want to use my debit card or credit card. Let me choose an option called buy now, pay later. So they select buy now, pay later, and there could be two cases. Either the customer is an existing customer of that BNPL company or a fintech company, or the person could be the new customer. So in this case, let us understand if the customer is the first time, right? Is the first time to that BNPL company. So what he or she does is that they just click on buy now, pay later. They gives the option. The e-commerce company will give the option depending on the type, right? For example, there could be one or two, could be three. In most of the cases, you'll find that one e-commerce company will actually tie up with maximum one or two. It is not an aggregated model. Like you click on a credit card, you will have like 10,000 options to pay through a credit card or a mobile wallet you can use, right? So generally, because it's the kind of, as we discussed, it's a sticky behavior. Even the e-commerce company will be able to do much if they stick with one provider, because again, there will be bulk volume of the loans and the transaction that will happen. Reconciliation will be easier, and it will be much easier to manage the entire cash flow, the inventory management as well. Because now BNPL has realized that just by giving the payment system, a merchant will not be happy. We have to give something more, and something more is now inventory management, customer data analysis, customer grievance management, customer loyalty management, and those kind of things are now embedded into the system of BNPL, and also the inventory management, that how much you have bought, how much has gone out, how much do you need. So forecasting and all those things are also now part of different BNPL companies, because apart from digital, I would say lending, they are now also giving the digital customer management or relationship systems as well. So okay, so coming back to this, so customer goes to the online shopping store, clicks on buy now, pay later, and then they get the option then they get redirected to the company where the person clicks. For example, if they have clicked on a BNPL company A, then it goes to BNPL company A. It gives them a sign up option. So the customer signs up, fill in all the details, and then on the basis of the detail, the BNPL company does a credit risk assessment. Now, credit risk assessment could be done in multiple ways, could be different like algorithms they run on the mobile phone on the details that they have asked you, or they can also do a soft inquiry from your credit bureau. Now, depending on whether the system approves the loan or not. For example, if the system says, okay, you are not credit worthy, or we do not think that we don't want to give you the loan, in that case, it goes to no, and then it says, okay, you're not eligible for the BNPL. Why don't you select other payment options? And if it is yes, then the transaction gets registered, the transaction gets completed, immediately customer gets a loan approved or a credit line approved, that okay, you are eligible to get this much loan, or you can proceed and you can make this payment right now. The transaction gets completed, purchase is confirmed, customer is happy, customer gets the product and moves away. This is exactly the same method on the store as well. For example, let's say a customer walks up to the store and says, okay, I want to purchase something, but I don't want to pay with my debit or credit card. I want to use this new option called BNPL. The store owner says, okay, that's interesting. Why don't you do one thing? You just download this application of this BNPL company with whom we have tied up with. You just download, fill up the details, and then the entire process of signing up, credit check, and everything happens in the real-time basis, and on the basis of that, whether the loan is getting approved or is not approved. If it is not approved, it says, okay, you are not approved for this loan. Why don't you use your cash or debit card or credit card, whatever you have. And if it is approved, then what happens that the customer can pay using their mobile phone as well, where the application of BNPL is downloaded. They can either scan the QR code, or they can pay through a link, or they can pay by providing certain kind of a virtual card as well, which gets created by BNPL. So those kind of different models can also happen. If that is, the transaction is approved, payment is approved, payment is done, customer walks away with the product, and while signing up, and when the loan gets approved, the customer also gets an option that, okay, here are 4 or 5 different options that you can choose to repay this loan. And then again, depending on the type of model the BNPL has, customer agrees, okay, I will pay this. So immediately, again, there are different flows where a customer has to link a credit card or a debit card, or say a checking account or a saving account, so that the money will get debited automatically whenever the payment is due, or the customer can also manually pay it later. So that is the entire flow. So customer walks away on the scheduled day, whatever the customer has agreed during the sign-up process or the onboarding process, the payment gets debited automatically from the bank account or from the credit card. So that is a flow in most of the BNPL companies, and that's how the transaction flow gets completed. Customer is happy, merchant is happy, BNPL is happy because they are getting customers and income. Customer is also happy that, okay, I do not have to pay everything upfront, I can pay it later as well, right? So it's a win-win system, and that is the reason we see that this model is getting a lot of importance. So now let us understand what we saw in the flow chart. So what happens? Customer chooses the BNPL option. The provider will do or conduct a real-time credit check. If the customer is approved, the provider will display the customer the terms of service, the repayment schedule. Customer can check out as usual. Everything is done, right? We have already explained it, the transaction flow as well. Now, 3 types of BNPL services which can be offered to a customer are fixed, flexible, and micro loans. What does it mean? Fixed offering means that it sets the repayment schedule in advance of the purchase, so the customer knows the number and amount of installment. For example, let's say if a customer wants to purchase a product of $100, right? And if the payment is getting, say, divided in 5 installments, the customer says, okay, I'm happy paying in the 5 installments. So which means now the customer knows that he or she has to pay $20 on each installment day. Now, installment day could be weekly, bi-weekly, monthly, or depending on what kind of product it is. And then there is a flexible service where the customer selects the number of payment, right? Which could be typically between 3 to 36. Depending on the value of the purchase and the merchant's agreement with the provider, the customer's credit worthiness is also important. Why we are saying that? For example, if a customer's credit score is just, I would say, above the borderline. So a BNPL says, okay, let us take a risk and give the loan, but the customer has to repay the loan or this amount within 4 installment only. So in that case, the customer will not get an option till 36. But if there is, say, a customer which has a very good credit score and says, okay, I want to choose for, say, 26 installments, and that's where the system realizes, okay, it's a credit-worthy customer, we can give them 26 installments. So again, in this option, customer chooses that in how many, I would say, installments I want to repay the entire amount. So in the first, the schedule is already fixed, where the customer has to choose the schedule. In the second one, customer chooses the number of installments. And in micro loans, what happens is that there is a small loan which is given to customers even before completing the checkout. The customer will pay a flat fee to the BNPL provider and agree to a fixed payment schedule. Which means, for example, again, we take the example of $100 because that is simple to understand. So, for example, the customer wants to, say, purchase a product of $100, but BNPL says, okay, I see that you are a good customer. I'm sure that you will be spending more amount on the transaction. So let us do one thing. Instead of giving you $100, we can give you, say, $200 as a credit line right now, of which you can pay $100 for this product right now, and you can repay the loan, and rest $100 is in your credit limit. You can use it anywhere, so that you do not have to apply for the purchase approval again and again. There is a pre-approved, I would say, limit, similar to the credit line we get in credit cards, right? Similar to that, they have a credit limit which they can use as and when they want. But in this case, they have to pay a flat fee to the BNPL company For example, let's say to approve a $200, they may have to pay, say, $1, $2, $3 as a processing fee or a flat fee to the BNPL upfront, and then they agree that okay, whatever is amount pending, I will pay that in the fixed repayment schedule. And for the fixed repayment schedule, they need to say link a credit card or a bank account so that the payment gets debited automatically, right? Or in India, there's something called mandate. Mandate means the fixed amount will come out automatically. You just have to sign the mandate digitally, and the account will get linked, and you authorize that company that okay, on this date you deduct this much amount from my bank account. So that's how this model, this payment model, and the transaction flow happens in BNPL. I'm sure that after going through this course and understand this transaction flow, you are absolutely clear now that how does transaction happen and at what point of time BNPL comes into the picture, makes life easier for everyone, and then stays with the customer till the time they repay the entire loan, right? So hence it is always advisable to repay the loan on time, whether it is of BNPL or of a credit company or of any other bank, because if you don't do that, your credit score will get sabotaged, and hence you will not be able to get any loan, even for your home mortgage or for your education loan, your car loan, or any kind of a loan. So hence that was about the transaction flow and some of the models on BNPL. So that's all in this chapter. See you in the next chapter. Till the time, take care and see you in the next chapter. Thank you.